If you're watching this right now, there's a good chance you felt it too. Markets have come up a bit, crypto's stabilised. The panic headlines have faded, attention has shifted back to things like regulation, narratives, and short term price action. On the surface, it feels calmer, almost reassuring. Not fear, not confidence, just this quiet sense that everything works until it doesn't. And I want to start by naming that because I think a lot of people feel it, but haven't quite put the words to it yet. That feeling that the system is holding on assumptions, timing, and confidence, like a house of cards that stays upright as long as no one breathes too hard. And if I'm feeling that, the market is feeling it too. Because markets aren't cold, logical machines, they're emotional systems built on belief, leverage, trust, and liquidity. And right now, all of those feel conditional. If you're new here, welcome. My name's Paula. And on this channel, we talk about crypto and markets in a grounded, real world way. We don't pretend this space is simple, and we don't ignore what's happening beyond the charts, because crypto doesn't exist in isolation. It reflects the world around it, especially when confidence starts to thin. And that's really the theme of this video. Not collapse, not doom, but fragility. A moment where things are fine, as long as nothing tests the system too hard. Right now, the markets look calmer than they did recently, but the world itself doesn't feel calm. And that disconnect matters. When you zoom out, we're sitting in a global environment defined by unresolved tension, high debt, restrictive financial conditions compared to the last decade, ongoing geopolitical conflicts, shifting power structures, and a general erosion of trust in institutions, currencies, and long standing assumptions. None of that has been resolved. But what has changed is sentiment. Markets swing between fear and relief. When fear peaks, positioning becomes extreme. When prices bounce, people relax. But often that relaxation doesn't come from the problems being solved. It comes from people assuming that they have time. And this feels like one of those moments. A pause, a reset of positioning, a collective holding of breath. One of the clearest signals of that comes from the US dollar. Yes, the dollar has been strengthening, but not in a way that suggests confidence or economic optimism. It is strengthening because, relative to everything else, it still looks like the least unstable option. That's classic risk-off behaviour. When uncertainty rises globally, capital looks for liquidity. It looks for depth. It looks for somewhere it believes will still function under stress. And despite all of America's own problems, the dollar remains the centre of the global financial system. But this is where the house of cards feeling really comes in. A stronger dollar doesn't mean the system is healthy. It usually means stress is building somewhere else. Dollar strength tightens global financial conditions. It drains liquidity. It puts pressure on debt, especially outside the US. It makes leverage more fragile. Crypto doesn't escape that. It reacts to it, often with a delay. So even if prices bounce in the short term, the environment they depend on is not loosening. It's becoming less forgiving. And in systems built on confidence, that matters. Now layer geopolitics on the top of that. The war in Ukraine hasn't ended. It's just stopped being shocking. And that's an uncomfortable thing to say, but it's true. For the people living through it, nothing has changed. The human cost continues every single day, and politically, the strain continues too. From a market perspective, prolonged conflict creates a different kind of risk. It's no longer about surprise, it's about fatigue. Funding fatigue, political fatigue, public attention fatigue. And those pressures build quietly in the background. Escalation risk never fully disappears. It just becomes easier for markets to ignore until they can't. Iran remains another pressure point, not because escalation is guaranteed, but because the consequences would ripple far beyond headlines. Energy markets, shipping routes, inflation expectations, global risk sentiment. All of these sit downstream of that tension. Venezuela fits into the same pattern. Resource rich, financially constrained, politically pressured. These aren't isolated stories. They're reminders that stress is accumulating in places markets don't always watch closely. Even areas people joke about, like Greenland and the Arctic, reflect something deeper. Strategic resources, shipping lanes, military positioning, a world reorganising around scarcity and power rather than stability and abundance. None of these are new on their own. What's different is that they're all unresolved at the same time. And unresolved systems rely heavily on confidence to keep functioning. That's where Japan quietly enters the picture. Not as a headline crisis, but as a signal. Japan has spent decades acting as a backbone of cheap liquidity, ultra low interest rates, a weak currency, capital flowing outwards into global markets. That model worked as long as inflation stayed low and confidence stayed intact. But that assumption is under strain. Japan now faces inflation pressures it hasn't dealt with in generations, alongside an enormous debt load. Tightening policy too aggressively risks destabilising its bond market. Not tightening risks further, currency weakens. It doesn't need to collapse for all of this to matter. Even small shifts can ripple outward. Liquidity becomes tighter, volatility becomes sharper, global markets become less forgiving. Japan isn't the house of cards. It's a reminder of how many cards the house is built on. And when confidence feels conditional like this, risk isn't just about price, it's about access. This is where counterparty risk comes in, and it's something people tend to underestimate until it's too late. In periods of uncertainty, exchanges can get overwhelmed very quickly. If fear spikes, volumes surge, systems strain, and suddenly withdrawals are delayed, restricted, or paused altogether. We've seen it happen before. And when it does, it's not just about losses on charts. It's about not being able to access your crypto when you need it most. That's counterparty risk in real terms. And in an environment like this, where confidence feels thin and stability feels borrowed, that risk is incredibly high. This is why where you hold your crypto matters just as much as what you hold. You need to store it somewhere that doesn't depend on an exchange staying solvent, liquid, or online during moments of panic. Somewhere that doesn't add another card to the house. That's why I want to briefly talk about Tangem. It's a non custodial hardware wallet, which means you hold your private keys, not an exchange, not a platform, not a third party. Your keys are generated and stored offline on a secure chip and never leave the device. That dramatically reduces counterparty risk, especially during periods of market stress. What I like about Tangem is how simple it is. Setup takes minutes, you tap the card with your phone, install the app, and you're in control. There's no account that can be frozen, no central server that can go down, and no seed phrase that you need to store digitally somewhere risky. From a security perspective, Tangem uses EAL6 Plus certified secure chips, the same standard used in bank and government grade security. And importantly, Tangem has never been remotely hacked in a way that compromised users' funds. That matters in an environment where online attack surfaces grow as stress rises. And this isn't just about storage. Tangem also allows you to stake certain assets directly within the wallet, including ADA, Atom, BNB, Sol, TON, and TRX, while still keeping full custody of your keys. That means you can earn staking rewards without handing control back to an exchange or taking additional counterparty exposure. So you're not choosing between security and participation. You can protect what you already own and put it to work in a self-custodial way. In a market where exchanges could be overwhelmed in a moment, where confidence could very quickly shift, and where access matters as much as price, that kind of control is incredibly valuable. And right now, Tangem has a solid offer running. Get up to $20 back plus an extra 10% off until the 2nd of March. And you'll get an extra 10% off using my link, which I'll put in the description below. I'm not saying move everything overnight, but if you're feeling that quiet unease, that sense that things are fine until they're not, reducing counterparty risks is one of the most practical steps you can take. When you step back and put all of this together, the picture becomes clearer. We're not in a moment of collapse, but we're not in a moment of resolution either. We're in a phase of conditional stability. Things are fine as long as liquidity holds. As long as volatility stays contained, as long as trust isn't tested, as long as nothing forces the system to reprice risk all at once. And that's what a house of cards actually looks like in financial terms. Not chaos, not fear, just a system that works as long as every assumption holds at the same time. And history shows us that those are the moments markets misprice risk the most. Not because people are blind, but because everyone assumes they'll have time to react. This isn't a call to fear, it's a call to awareness. To recognise that calm doesn't equal safety, that relief doesn't equal resolution, that confidence right now feels borrowed, not earned. If you can sit with that tension without reacting to it, if you can understand the environment you're operating in rather than chasing certainty, you're already ahead of most people. Markets don't fall apart when everyone is screaming that they will. They reprice when people stop paying attention, stop questioning assumptions, and mistake stability for strength. If this video helped you put words to that feeling that you've had but couldn't quite explain, make sure you like the video, subscribe to the channel, and share it with someone who's feeling the same quiet unease beneath the calm. Because understanding the moment you're in matters, especially when everything looks fine on the surface. And remember, as always, if you want to understand the exact strategies we use in the Crypto Wolfpack to make money in both the bull market and the bear market, we've made a completely free course for you. The link is in the description below. Thank you so much for watching, and I'll see you in the next one.